Since the beginning of 2015, the rand has depreciated by more than 40% against the US dollar. While this has negatively impacted on many sectors, it has been a bit of a windfall for some mining companies. The gold sector in particular enjoyed a boost as the average rand price of gold has increased substantially as a result. I'm now joined by Finweek editor Jana Marais, who's also joining us from our Cape Town studio. Welcome to you, Jana. Good to see you again. Maybe let's get straight into it and find out which companies in the commodity sector are best positioned to take advantage of this weaker rand.
Hi to me. Yes, I think it's really the companies with a lot of their operations in South Africa, and as well as having a lot of production cost that is rand-based. So we've seen, I think everyone's been talking about Harmony Gold this week. You know, the share price is up 70% since the start of the year, which is almost unbelievable if you think for how long we've seen Harmony as a dog because of its massive exposure to South Africa from a production point of view. So it's really, you know, the South Africa-focused companies, Sibanye Gold, Harmony, Kumba Iron Ore, Exxaro, those kinds that's really been buffered by the weak rand.
We've been talking about the price of gold, but what is the rand price of gold currently, and how does it compare to where we were last year?
Yeah, I think we've all just been looking at, you know, record lows, like record low against the dollar, but actually the gold price is trading at a record high in rand terms. So it's really been good news for South African-based miners. We're over 600,000 rand a kilogram, and that's up 20% over a very short period of time, and over 30% if you compare it with the average gold price in 2014. So really the South African-based gold miners are milking it at the moment.
It does sound very positive at the moment, and of course you'll find some analysts and investors who say will not go into the commodity sector right now. Everything that you said now, do you think that it's enough to change a sentiment, the negative sentiment that we have seen towards commodity-faced stocks?
Personally, my view has not changed. I'm still very bearish on commodities. You know, if you look at Harmony again, yes, if you're a speculator or a short-term, you know, trader that's gotten into the stock towards the end of last year, you are sitting pretty. But if you've been a long-term investor, you're still very much crying in your beer. And I think the fundamentals of the commodities market haven't changed. You know, there's still not a big significant driver that's going to boost demand. There's not a China circa 2000 that's going to kickstart the next super cycle. We haven't seen enough supply come out of the market to support prices. We've seen things like the Baltic Dry Index at record lows this week. You know, Brent crude dipping over below $30 a barrel today. So yeah, I'm not seeing much good news out there, but perhaps there's a few brave speculators that's really cashing in at the moment. But for long-term investors, I don't think it's an industry or a sector to get into at this point.
Jana, thank you so much for your analysis on the cover story for this week. Of course, that was Finweek editor Jana Marais.